Hello and welcome back to another session of the Market Outlook series. I'm Kavita Agrawal, the founder of EXP-Invest, and like every weekend, we are here to talk about Nifty, Bank Nifty, and the intersector chart analysis. So let's go forward and see what the 3-minute time frame has said about the consolidation, the way it has unfolded. And one time frame at a time, we'll move higher to build a case for the coming time. Nifty has been in consolidation. My expectation was that Nifty was going to stay in consolidation, but today something very interesting happened. Let's take a look at the charts and reveal what happened today. So this is the 3-minute time frame of Nifty, and as you can see right here, today we experienced a breakout from this consolidation zone. So Nifty went into consolidation, you can say, kind of on 29th of December. So basically, since the New Year's, like since the 2024 year started, today was the first time that we saw an all-time high, which is quite a big deal. This level of 21,800 had been posing as a strong resistance for the index. So this level of 21,800 had been posing as a very strong resistance for the index, and keeping it lower, keeping it away. If you look at these levels, right? So this is the first time it took resistance, and after that it approached the resistance multiple times, 21,700-ish level. It wasn't able to overcome it until today. It overcame this resistance with a massive gap up and continued to close above the level of 21,900. Now, if you look at the 3-minute time frame of Nifty, when the market topped out here, in the market outlook series that I did on 29th December, I had indicated that I'm expecting a sideways consolidation for a couple of weeks. Why? Because the 3-minute time frame had gone into the bearish range, but we can see that once the index took support at this blue line, which is the 200 EMA of the 15-minute time frame, superimposed on the 3-minute time frame. After that, the RSI of the 3-minute time frame moved into the bullish range, and today it became like super bullish. So now let's take a look at the 15-minute time frame and see what is unfolding here. So on the 15-minute time frame, again, since the consolidation started, the RSI was very confusing. It was taking support at the level of 40, which is the support level for a bull range, and it was taking resistance at the level of 60, which is the resistance level for a bear range market. And that was very confusing, but today, thankfully, even that confusion has been dissipated. So let's mark these separately. This is not essentially a bearish zone, but this is a this was a very confusing market, but now we've come back into proper momentum. What I expect now is that the level of 22,000 will pose as a resistance, primarily because it is a major psychological resistance level, and there is this thick blue trend line which has been drawn. Let's go on the 75-minute time frame, which has been drawn using the peak as old as April 2022, right? So this trend line might pose a bit of a resistance, which also coincides through the 22,000 level. However, since the Nifty has now almost achieved the initial target of 22,000 given a breakout, there is something else that I would like to tell you, but that'll have to wait, because what I want to tell you immediately right now is that this volume, this breakout that has appeared today, right? Let's zoom into this. So this breakout that appeared here, I would have been happier if this had happened with a little bit more volumes, but we didn't see a lot of volume. The only time the volume actually came was in the closing last 75 minutes. I'm guessing, so I have two guesses here. Number one, that maybe like me, other people are already 100% invested in the market. So this breakout was very well anticipated, and because of that, nobody has cash. So, nobody that matters has enough cash. So that is why no major buying was seen. Another one is that maybe people were not believing in this breakout yet because, you know, the market has been in consolidation, like I said, for over 2 weeks. Maybe they're waiting for a little bit of a pullback to the support level, which brings us to the next question. Where is the next support for Nifty? So now that the resistance of 21,700, 21,800-ish range has been breached, the next support is naturally the same range. So we know the concept of fungibility. Once a support gets breached, it becomes resistance. Once a resistance gets breached, it becomes support. So since this zone has been breached, it has now become the support for the index. So 21,800 to 21,700 is expected to be the support for the index. And I don't see next, at least first half of the next week, starting with any kind of pullback, because this rally is pretty good. And we know that this rally is also being spurred by a lot of movement coming in from the global front. Moving on to the daily time frame. So the daily time frame doesn't really have a lot of story. The story unfolds really, really slowly. What I can see is that the bullishness has been quite intact, except for the volumes. So the volume participation has been declining in the overall market since the resistance of 20,900 was breached, right? So the last leg of the rally, that is from, you know, since we entered 21,000, you can say the last 900,000 points, the volume has been a little, you know, not very encouraging. This might also be an early sign of exhaustion, but it's too soon to tell. Just a side note to, you know, keep on the margins. Like I said, today's price activity has been very good, but the volume has not been very encouraging. So I would like to see the volume to improve in the next week, right? Now, if the resistance of 22,000, right, if that resistance gets breached with good volumes, okay, with good volume, so it's not just the price resistance that I need to get breached, I also need to see good volumes in this. If I see good volumes, then you can consider my target in Nifty revised from 22,000 to 23,200. So that's a 1,200 point addition to the unfolding leg of Nifty. I had given this target of 22,000 when the market broke above the level of 19,800, right? Because that was the threshold that I was holding on to, that if the market breaks above 19,800 with good volumes, then I was expecting good a full leg of rally, and that did happen. You see here, when the level of 19,800 got breached, then you see on this candle, the very next candle, that is the daily candle, look at the strong volumes. I mean, it's very evident that, you know, strong participation came beyond that resistance zone. So this is, you know, even if not this strong, I would expect, you know, at least on this. So this was the MACD volume, by the way, comparing the 20-day average volume with the 100-day average volume. I would want to see at least some sort of green candle, you know, at least, you know, similar difference between the 20 EMA average. I mean, the volume should be strong enough to drive the 20 days average significantly above the 100 EMA, at least by 4 million on average, right? That would be my expectation. So with that in mind, let's move on to Bank Nifty. As the chart opens up today, our active recommendations for swing trading have done pretty well. We had a call on Infosys for our swing traders, and it was up, you know, 78% today. That too after a week results. So I'm very happy with that. And also cheers to the members who are attending this session. Let's see. Trading in Infosys right before its results has kind of become a theme for me, and in the last 3 quarters we've made some pretty good swing profits trading in Infosys right before the results, irrespective of what the result expectations are, just pure price action. All right, looking at the 3-minute time frame here, okay, Bank Nifty. So remember, in the last week's market outlook, I indicated that Bank Nifty is not looking as strong as Nifty, even though both are in consolidation, but Bank Nifty had a bit more of the negative biasness, and that is what has kind of played out here, because today Bank Nifty has not forged a lifetime high, even though Nifty did, right? That is really saying something. I really hope that this doesn't become a reason for the end of this rally. I would be very sad because, as a swing trader, I like the market when it is bullish. I don't like the market when it is choppy, and I'm neutral to a bearish market. But yeah, okay. So what I see is that the support level at 46,900 has played out pretty well, and for Bank Nifty, the next resistance continues to be the level of 48,637. The volume activity in the consolidation naturally has been pretty dull, which is to be expected. What is the daily chart trying to tell us? So see, there is another difference in the charts of Bank Nifty and Nifty. You will see in Bank Nifty, the RSI of the daily time frame has come below the level of 60, whereas the RSI of the Nifty chart is still way above 60. It does not even acknowledge the last 2 weeks of activity where there was no rally. It's just way above 60, indicating that the rally is going to continue. It is still pretty strong, but not in the case of Bank Nifty. There is some indication of a bit of a negative divergence on the daily chart. There is a bit of a negative divergence on the 75-minute chart, on the 15-minute chart. I mean, the 15-minute chart is in a straight up bear trend as per the RSI, and volumes I've already mentioned, like there is no pickup in banks. So I am not very bullish on the banking stocks right now, private and public. In fact, although one of the banking sector stocks did, so we exited during the consolidation, and within 2 days it went up like 8%. That was RBL Bank. But such things happen in swing trading. It's it's the reality of swing trading. So we cannot go back and get into revenge trading, that is purchase the stock because it is run up now, because the risk reward ratio is no longer attractive, so it doesn't make sense. The only takeaway is that my stop loss might have been a little bit tight because it just triggered my stop loss and then went up. And yes, that is something that even happens to professional traders like me. All we do is we keep learning and we keep optimizing, because there is no state of perfection. It's always going to be a work in progress. But anyways, coming back, let's now move on to I've given you the support, I have given you the target. So the support on Bank Nifty, just to reiterate, is the level of 46,900, and the resistance is 48,600. Now let's move on to the favorite part, which is inter-sector chart analysis. And what is this telling us? So we are comparing all the sectoral indices with CNX 500 to see who's been leading, who's been lagging, and where should our money follow the momentum. So if let me actually take a look at, let's close this. Let me take a look at Nifty and see where, if it forged like, I mean, technically, if I look at this, technically I want to see which is the sector which is kind of rallied since this bit, right? Since Wednesday, but it's going to be a little too short. So actually, let's see from 3rd of January who has rallied and who stayed back. And the IT sector, by the way, is coming around beautifully. If you watch the previous week's market outlook and the week before that, I have been indicating that some signs of strength are developing in the IT sector. And just 2 days back, I gave my members calls in a lot of IT stocks. And today, like I said, one of the IT stocks, Infosys, closed almost 7.5% higher than the recommended, the previous close, which is phenomenal. So the IT sector is definitely looking super attractive, even though most of the stocks in this sector have moved up pretty strongly. Be sure to, however, use your stop losses. The reality sector, as we can see, is come out of the sluggishness and started to rally again. Infra sector not far behind. Energy sector continues to rally. Consumer durable has finally caught up and started to show the action that I've been anticipating. Not much comment on the PSE. I think the PSE sector, the public sector enterprises sector, has already rallied quite a bit. So making fresh entries there may not be in your best interest. Buy on dip may work for select stocks, but making fresh entries, you should be very, very cautious. Make sure you're looking out for risk reward ratio of minimum 3. Nifty healthcare and pharma sector. So today, some of my profits got booked in these positions. I think the rally was unfolding, but it's time to start trailing the stop losses a little tightly on the pharma and healthcare sector. There are select stocks in the finance sector, which are not banks, by the way, that are showing some positive promises, like HDFC, AMC, for instance. Again, part of my PMS and performing beautifully. Metal, I think metal is the underdog right now, but not for a very long time. I think some very attractive opportunities are forming there. So the sectors that you need to be very careful of are, in my opinion, predominantly Nifty, Bank Nifty, and then PSE. The auto sector is a bit of a mixed bag right now, and pharma and healthcare, again, a bit of a mixed bag, but reaching to a point where, not so attractive. Sectors which are very attractive right now, top of the list is IT sector for sure, and followed by the realty sector is obviously there. The infra sector, consumer durables, consumer services is also looking good. You also want to take a look at CNX, the consumption sector stocks, and metals. Okay, don't forget about metals. All right. Just before I start looking at your comments, I want to give you a reminder that if you want to connect with me and if you want access to my daily market commentary, please join my Telegram channel. Search Trade with Kavita on Telegram, or I'm dropping the link for you in the comment section right now. And there you go. I have dropped my Telegram channel for you in the comments. Make sure you look for it and join my Telegram channel for daily market commentary. Another reminder from the ET moderator, this one, that if you want to do, let me go full screen for this. So if you want to do swing trading with my recommendations, then you can join me on the GapUp platform. GapUp is a very good initiative by Riggy, in tie-up with Economic Times and Money Control, where they bring to you SEBI-registered research analysts who have vetted experience and have proven their mettle in the market with over decades of experience, like myself. And if you want to, and see, that is also the right way to trade in the market, with the expertise of somebody who's been there, just how you file your taxes with the help of a CA, or go through your fitness plan with the help of a fitness expert, go to a doctor for, your healthcare needs. Same way for your portfolio needs, you need to work with a SEBI registered research analyst. So go on platform, and just like practice for doctors, GapUp will help you match with the research analyst that suits your requirements and give you services in line with what you need. So if you're interested in working with me specifically on long-term investments or specifically on swing trading, then click the link shared by the ET moderator. Now that I have shared everything that I came to share, I'm going to quickly take a look at your comments and help you out with your stock queries. So if there is any stock in your portfolio that you're stuck in, do this for me. Go to your portfolio, see the name of the stock, drop the name with the cost price, and I will do a quick analysis and tell you the important support and the important stop loss and target levels that you need to follow to get out of the tricky positions. So let's turn to the comments. And all right, so we have someone who joined before the live session, but unfortunately he's asking about long Nifty target. So the problem is that I don't trade Nifty, I don't trade options, so I cannot help you out with that, unfortunately. But if you have a stock query, do feel free to share that with me. Next, we have Mr. Jalan. Welcome back. UK-US strikes, oil up 4%. Can this impact market? Yes. Oil going up is never good for the Indian market majority of the time. So yes, a little bit of pullback may be experienced because of that. And if this level of 21,700, 800 gets breached, then I can see that there is this 200 EMA of the 15-minute time frame, which can lend support to the market, which is not significantly lower, somewhere around that level. So basically, this entire zone becomes like a probable support level for the market. I would not expect this low to get breached, okay? But again, I wouldn't also pay a lot of attention to it because, you know, the Indian market has shown amazing resilience and I'm personally very bullish on the market. Navin Fluoro for Shravan. All right, 4350. Let's see. Let's see Navin Fluoro with an entry price of 4350. 44350. Okay, long time back. You're stuck. Okay, no worries, no worries. See, Navin Fluoro, I think, you know, being a chemical stock, I think it is very bullish for the long term. So if you are okay committing a capital for like the next 3, 4, maybe even 5 years, this is the stock for you. In my advanced technical analysis training class, I always tell my students or, you know, the participants that you need to study all time frames of the chart to identify the personality, and this is how Navin Fluoro operates. I mean, just look at these mammoth jumps on the chart, right? So this is what I would ideally want to capture in Navin Fluoro, right? So this is the trend line where it has been coming back. Let me make it a little thicker for you. So this is the trend line. Right now, it is at the base, like at the lowermost trend line of this very strong. I mean, just look at the slope of the trend line unfolding on it, right? From the outside, you will probably think that the stock topped out back in 22 and, you know, 40% down 1 year, no activity. But that's not the truth. The stock actually, you know, even though mathematically it's not the highest price, but the stock actually topped out back in 2021. Since then, it has been in consolidation. And this intermittent peak that we actually saw wasn't the stock, it wasn't the stock trying to, you know, rally. It was the stock going into consolidation and happening to make a new high. This is a very new concept, and I have been studying stock personalities since many years, and this absolutely makes sense from a stock personality perspective, right? You know how you're not trying to do something, not trying to achieve, but when you're like really good, you make small achievements which, you know, you've not been trying to make any effort for. That is what this is. The beautiful part about Navin Fluoro and why you shouldn't worry about your investment is it has just taken support of the 200 EMA of the weekly time frame, and the 200 EMA is exactly where the last time the stock also took support and rallied massively. That rally lasted, it went on to become a 6x rally in just 763 days, which means 2 years. Less than 2 years, no, a little bit more than 2 years, but the stock rallied 5x. So I would expect at least half of that rally in at least double the amount of time. It is still a very attractive investment, right? So I would expect the stock to, you know, retest the same trend line that it has been retesting in the previous peaks. So I am glad, Shravan, that you asked for Navin Fluoro. I hope the other attendees of this session will benefit from this long-term stock that we've just discussed and the analysis as well. All right. If you are enjoying this live session and if you find any value in it, don't forget to give a thumbs up before you go. Yes, bank target for Mr. Rajiv. Mr. Rajiv is also part of our Trade Together program. So Rajiv ji, if you can say a few words about the Trade Together program while I analyze your stock, that'll be great help. All right. So yes, bank seems to be forming a bit of a rounding bottom and I can see it go up. I would expect the stock to retest the level of 38 rupees quite soon, which is, I don't know if it'll retested before March, like you're asking. It's very hard to give time frames that way, but I would expect by March the stock to retest a smaller target of maybe 32, because that's also a resistance. So you can take that as a target, which is also, by the way, pretty attractive, right? Very good rally unfolding here, and this is one of the banks that I am actually quite bullish on. And for those who might wanna make fresh entry in Yes Bank, now is a very good time, because you can start making positions in the next 5% downside, basically between the level of 24.8 all the way to 23.15. But please be sure to maintain your stop loss. Unfortunately, your stop loss here will have to be a little on the heftier side. It's going to have to be 15-20% because very high beta stock, very high risk. What you can do is you can accumulate your position instead of going in for a all in at once. Next is IB Real Estate. Just a query, no position. Suman, got it. IB Real Estate. Let's take a look at IB Real Estate, one of the realty stocks. Now we've already seen the realty stocks doing pretty well. So 39. So I have been hoping that the stock would come back down all the level to 39 because obviously very important support, but it looks like the stock did not come to my support level. So no problem. Let's just clean up the chart a little bit, right? I do think that the stock is running into a little bit of a so see, the stock is already at 52-week high first of all, and there is a resistance coming in from the 500 EMA of the weekly time frame, and the volume activity has started to decline in this last leg of the rally. But the stock has also breached above the 200 EMA. To be honest, I would like to wait to see the stock give some correction, maybe for the 15-minute time frames RSI to come back to the level of 30 to even consider going long on the stock right now. Moving on, let's see. HDFC First Bank. All right, so I am bullish on HDFC First Bank for Ramit. So I am bullish on HDFC First Bank, and we can see that it has given a pretty sharp turnaround from the level of 53.20, and if you will notice on this chart, there is a pretty strong support level available at the level of 81, and I believe that IDFC First Bank is one of the very rare banks which have upside alongside Yes Bank right now. See, most of the frontliner banks, I don't think they have a lot of potential. Now if you look at the daily time frame, there is a very beautiful doji which has forged this low, which was created 2 days back, and I would not expect this low to get breached, and if the market momentum holds up, I would expect IDFC to also keep going upward. And talking of stock personalities, again, IDFC First Bank is also a very bullish stock. Look at the momentum of, look at the slope of the trend lines which are drawn, very strong slope, and this is the support trend line, right? And we can see that the stock took support at this trend line last time when it rallied, and again it has come back to take support here. And the daily time frame is also showing a bit of a RSI positive divergence on the previous leg. So this was a major correction, and then the market bottomed out, and then we saw some upside. And if you see this upside, even though it took resistance at 92, it happened against pretty good volumes, which is quite promising. So this dip basically becomes a very good dip to purchase. So if you've not entered the stock yet, it's not too late, you can still do it. But what you need to be careful about is that you should use a stop loss, and the minimum stop loss should be 82.25, which is a little bit of a comfortable stop loss. So if you can afford to keep a bigger stop loss, then go for, if you have a higher risk appetite, go for the stop loss of 80%, 80 rupees, but your holding period will also grow to at least somewhere around, I would say, 6 months, and your target would be pretty big on this. So your target, I would expect the target of around upside of at least 30% to get achieved with a level of 115. Let's move on to the next stock. Okay, IRB Infra. So lots of infra stocks for Mr. Gautam. He bought the stock at 42. Right. IRB Infrastructure. What does this look like? Again, very strong rally unfolding. Moving to the weekly time frame. Oh, stock has given a breakout, and it had been on a bit of a down, down sliding trend line, but clearly that has been entirely mitigated. Beautiful long-term highs. So what we need to do is we need to refresh this trend line setting. So I'm going to delete all of this and let's just focus on this, because this is the best representation of the markets, of the stocks activity. And I kind of want to take the low of this candle rather than the spike low. And actually this candle seems a little bit more appropriate to me. Let's clone this here. That seems correct. Let's cover the peak first. That seems right. And now let's cover the intermittent peaks. So I'm going to cover this one first. And naturally, I also need to cover this one. Okay, this is a very, very sharp rally that is unfolding. And I would expect more upside to unfold here. I'm seeing at least 18-20 more percent, target price of 55. Stock is also good for fresh entry because volume's pretty good. Yeah, volume is definitely very, very promising. Some dip can come here. Maybe try to enter. So do a phased entry in the next 5-6% downside, right? Because the stock has just created a upside. And if you look at the past trend, the stock has a tendency to give like a sharp move up, but it also has a tendency of retracing all of that sharp move. So this sharp move can be expected to be retraced over the next few days. And this is where the support of the stock lies very clearly, very evidently, 43.5, right? And this is, I think, where we would expect a nice sweet little upside to begin. So if you want to start purchasing IRB Infra now, what you can do is you start buying in tranches, 25% of your position until you've accumulated 100% of it. Set your stop loss here at the level of 42.6 and continue to hold. But remember, when the stock goes up above the level of 48, check back with me for a revised stop loss on this one. All right, we just did IRB Infra. All right, Gautamji, sorry, one stock per person, lots of requests. ADSL for Ashish. Light Digital Services Limited. Okay, volume is very good. Clearly a strong bull trend has started here, so we'll capture that. If I connected this, I am not very comfortable with this, with what I'm seeing. There is pretty strong resistance near this level. See, there is a trend line and there is a horizontal green zone, so 260. So that doesn't leave you a lot of upside. On the other hand, this stock is a little bit, I wouldn't say it is illiquid, but your stop loss will have to be quite big, at least 20%, even 25%, which I am not comfortable with. So for me, the stock is a no-go. But you've bought it at 160, so you bought it at 160, so the stock is a little bit high since then. What I would suggest is you maintain a stop loss with this support in mind, this previous peak, right? So ideally this peak should not get breached. So 142 ke aspas you maintain your stop loss. All right. All right, so Manjunath is asking, Reliance, do I see it touching 3,000 as there's been a breakdown in the last couple days? Did you say breakdown or did you say breakout? Last 2 days has not been a breakdown in Reliance, my friend. It's been more like a breakout with super high volumes. This looks pretty promising because the resistance at 25 85 or 2600 that was keeping the stock low since many attempts to forge new high has been breached with very attractive volumes. And considering how attractive the volumes on Reliance are, I am expecting that Nifty is also going to continue to rally despite of the fact that a lot of volume is not visible there. So this is very encouraging, and this is like breaking out of a multi-month, multi-year resistance for Reliance, which is very good. So here again, can I expect Reliance to come retest this trend line? I would. So this is like the beginning of a very fresh rally, and it's not going to be a one-line rally, but I do believe that it's time to activate the target of 4,000 on Reliance, right? It looks very promising. So Reliance is a definite go. It looks very attractive. Tata Technology, buy levels and target. Okay. Not much chart data here, but I do not like the stock a lot. I don't like stocks where there's a lot of retail participation and retail interest. So this is very close to support zone. The good thing is that if the stock forges another lifetime low, then you can just get out of it. Maintain a stop loss at the level of 1148 and expect an upside of 10%. I mean, it's hard to give anything more than that. I'm a technical analyst, not a, I don't do intrinsic valuation. So hard for me to comment on that, Nayan. I'm sorry. Let's take a look at BDL. Very beautiful rally unfolding here, and I do expect this rally to continue, even though we are expecting a little bit of consolidation right now. But the good thing is that as long as up to the last candle, when the stock was in uptrend, the volume was super promising, and since the time that the stock has gone into consolidation, first, it is taking very good support at this yellow line, which is the 50-day EMA. Second, the volume is in consolidation, or the volume is declining, which means that there's participation in the uptrend, there's no participation in the sideways or the downside. So we can expect that the bull trend is going to continue. So continue to hold your position, but just make sure that you set your stop loss somewhere near this level. Basically, this last leg of upside that we saw, right? We wouldn't want to see this get broken down, or wouldn't want to hold our positions beyond the break of that last leg of upside. So 1564. Now, again, that stop loss is a little bit big. It's almost 9%, but the beauty of it is that the upside is not really known. So I'm not satisfied with this trend lines at all. So I'm going to delete them and I'm going to work on it later. But I think this was like a very good uptrend in BDL, and I expect it to continue. All right, we have 6 more minutes. All right, let's see. Let's take a look at SpiceJet for relate with Richa. Let's take a look at SpiceJet. What do I see? So looking at the monthly time frame, ooh, very strong activity and very strong volume, strong uptrend. So it seems like things are changing up. And oh my God, what a picture perfect support and beginning of a rally. So I'm definitely, this is making the chart of SpiceJet look super attractive. Super duper attractive. Good breakout above the 200 EMA of the monthly time frame with strong volumes, and above the 200 EMA of the weekly time frame, again with strong volumes. This is definitely looking very good. SpiceJet. So Richa, you should continue to hold your position. Consider adding more to your position if the stock comes back down to the level of 55. And this even goes out to the other members that this is basically your accumulation zone, the next 10 to 15% downside. Because see, even though the SpiceJet stock is giving strong volumes, if you just judge this, it does give pretty sharp pullbacks. So if you cannot go in with a smaller than 15-20% stop loss here, but considering the upside potential, go invest in the stock of SpiceJet from a long-term perspective, not a short-term perspective. So this rally has just begun and it is catching superb momentum. So thank you, Richa, for sharing this stock with all the viewers. I'm sure other people will be able to benefit from your query. All right, let's take a look at Wipro. Let's take a look at Wipro for Kunal. And a quick reminder to everybody, please don't forget to like this session and share it forward if possible with your friends in your community to, you know, help this platform grow. All right, Wipro. See, I've been bullish on Wipro since forever, and when it went into this consolidation right here, I've been telling people that this is a super good stock for long-term investment. This has been part of my long-term portfolio for a very long time. Now it has it has proven, it has established the base, it has given a breakout, and just look at the beautiful volumes right here. This rally is here to stay and continue. Now is a good time to even enter, like even now is a good time to enter, because this rally has just started and the stock just took correction and bounced back from this blue line, which is a 20 EMA of the daily time frame. And I expect the stock to, you know, before it takes the next correction, at least go for the target of 538, right? Overall target on Wipro at the least for me would be around 800 rupees. So Bejijak, okay, purchase the stock, hold on to the stock. Very good company, amazing proven results, and technicals are looking fantastic. All right, we've got a couple more minutes. I'll try to cover two more stocks. Let's take a look at TCS and EXID. Let's do these two stocks. Okay. TCS, see, again, like I said, the IT sector has come out of the year-long slumber, and my portfolio has a lot of IT stocks and chemical stocks right now because I expect a lot of activity to come there. TCS again strong, super strong volume. आज बहुत अच्छी gap up opening हुई इसमें, and see sectoral tailwind, right? TCS का भी रिजल्ट आया, Infosys का भी रिजल्ट आया. Infosys का उतना अच्छा नहीं था, but because इतना sectoral tailwind है अभी IT sector में कि Infosys also closed like 7.5% higher. So that is why you always need to keep an eye out for the momentum in the sector level rather than get derailed by things like earning reports. Because think of it like this, जो earning reports आता है, that is a stale piece of information. The price and the volume activity is showing you something that is very, very real time. So give more weightage to what the price and volume activity is saying, because what is being reported to you in the earnings may not be relevant. And this is purely from swing trading perspective, right? Where your holding period is like 2 weeks to 3 months. आपके लिए एक single earning report का कोई value नहीं है. What you need to focus on instead is the trend of the earning reports. Like, is the quarter-on-quarter revenues growing, margins growing, are the margins stable, is the order book stable, has the company been engaging in continuous capex, वो सब चीज़ों पे आप ध्यान ज़्यादा दो. एक single earning result के ऊपर obsess करके there is absolutely no point. That being said, in the stock of TCS, what you can do is fresh entry. So I will not recommend in TCS. You can go for Wipro, not recommend fresh entry in Infosys either at this point, because I think it's rallied quite a bit. Fresh entry is not recommended, but if you have an existing position, maintain your stop loss. यहाँ पे around 3737 का stop loss आप maintain करो, and the minimum target for you should be 4244 in TCS. And the next stock, the last stock for the day, is EXID Industries for Swati, who's also a member of the Trade Together program. Let's see. All right. Wow, what a rally, what a rally, and it is operating at the lifetime high. Fresh entry तो नहीं recommend करूँगी, even though see this rally is pretty strong, but आपको अगर fresh entry करनी है तो you wait for the stock to take a bit of correction. The stock does have a tendency to do that. You might have to wait a little bit you might have to wait a little bit, but I think the stock. So even from the long-term perspective, I can't recommend you to make a fresh entry right now, but I can give you a long-term target on the stock, and the long-term target would be 437 because of the cloning trend lines that I have drawn on the chart. This is where I would expect the rally to come to an end, which is a beautiful upside of around 30%. Not a very big target, I would say, especially not worth pursuing given the risk reward ratio. आप अगर यहाँ पे अभी एंट्री करोगे तो आपका stop loss will have to be a minimum of, your stop loss will have to be around 17%. So your risk reward ratio is not very attractive. With this, I have come to the end of this market outlook series. I hope I was able to add some value to you. If yes, then please give a like to this video before you leave. Thank you so much for giving me your time. I will see you again on Monday. And I have exciting plans for the retail traders session coming this Monday. If you want information on what I am bringing to you in the retail traders session starting Monday, please join my Telegram channel. I will be revealing that information on Sunday, one day before the live session. So I will see you on Monday at 5 p.m. same place. Thank you so much for joining in. Namaste.